You know, in the world of trading, there's a huge war constantly being fought. But it's not against the market, it's inside the trader's own mind. It's this epic battle between your impulses and your system. And today, we're going to break down how a single pivotal day for one trader teaches a lesson that really separates the amateurs from the pros.
So this right here, this is basically the whole game in a nutshell. On one side, you've got that new trader energy, right? That frantic feeling that you have to be doing something all the time to make money. The fear of missing out is just screaming at you. And on the other side, you see the calm, cool patience of a pro who knows that the real money isn't in the action, it's in the waiting. Let's see how this plays out for real.
All right, so our story starts right here. Our trader kicks off the day with a win. And man, that first win feels incredible. That dopamine hit is real. But it's also exactly where the trouble begins. Okay, so picture this. It's early morning, coffee's on, and our trader is amped. He's finally got a whole day to himself, no distractions, just him and the markets. He sees green all over the place, from Asia and Europe. The feeling is electric. Today's the day he's gonna make a killing. But he starts off smart, with discipline. He can almost hear his mentor's voice in his head, telling him to control his risk, stick to the plan. He spots a perfect setup in a stock, SRSS, and nails the execution. This is how it's supposed to be done. And bam, it pays off. The stock moves just like he thought. And just like that, he's up 200 bucks. That feeling, that I was right, I've got this feeling, starts to bubble up. But of course, there's always a catch, right? In this case, $20 in commission fees come right off the top. It's a small but pretty important reality check. So he walks away with a nice, clean $180 profit, a successful trade, totally by the book. His confidence is absolutely through the roof. He feels invincible. And that feeling, yeah, that's exactly where the trouble starts. That first taste of success creates an itch. A really dangerous thought starts to creep into his head. Hey, one good trade is nice, but it isn't enough. I can do more. He suddenly feels this overwhelming urge to get that money right back into the market. He glances over at his watch list and sees another stock, DMY, just hitting a new high. The part of his brain that craves action is starting to shout down the part that follows a plan. And just like that, the plan is completely out the window. No entry strategy, no exit strategy. He just dives in head first. At this point, he's not trading anymore. He's just chasing the high. The second he clicks buy, this wave of pure panic just washes over him. What was I thinking? He has no plan for getting out, no reason for getting in. It wasn't a calculated move, it was a blind bet, and it was fueled by nothing but pure greed. And sure enough, the stock immediately stalls out and starts to reverse. He panics, sells, and then he sees the brutal truth in the numbers. He made a tiny $10 profit, but after paying 20 bucks in commissions, he's actually lost money on the trade. The thrill is gone, and all that's left is that sick feeling of making a completely avoidable mistake. So, humbled and a little beaten down by his mistake, he does the smartest thing he could possibly do. He picks up the phone and calls his mentor, the rich trader, to figure out what on earth just happened. He gets right to it. He asks the one question that pretty much every struggling trader has asked themselves at some point. Why? Why do we make these impulsive, unplanned trades that just completely sabotage our own success? The mentor's diagnosis is fascinating because it has absolutely nothing to do with charts or market analysis. It is pure psychology. The root causes? He says it's impatience, chasing excitement, arrogance from that first win, and, this is the big one, not having a solid written trading plan. Our guy checked every single one of those boxes. Then, the mentor's advice just reframes the whole goal of trading. He says, look, this isn't a video game. It's not supposed to be entertaining. In fact, the most profitable trading is often boring. It's a game of patience, just waiting for that perfect setup, not chasing nonstop action. And this, right here, this is the core lesson of the entire day. Your system is what builds wealth over the long haul. Your ego, that voice that craves action and needs to be right now, that's what drains your account day by day. The final word? Trade your system, not your feelings. So what does a system like that actually look like? Well, that brings us to the final and most actionable part of our explainer, how you can move from emotional impulse to objective, calm execution. Okay, so here's the mentor's blueprint. Step 1, use a method that's based on numbers, rules, principles, a real system. Step 2, and this one is so critical, write it down. A written plan is your anchor when things get emotional. Step 3, use objective data, charts, probabilities, not your gut feeling. Step 4, react to what the market is actually doing, not what you feel it should be doing. And finally, maybe the hardest part, don't attach your ego to the trade. A single trade doesn't define you win or lose.
You see, when you can create that little bit of emotional distance, when you can become an observer of your system instead of a participant in all the market drama, your decisions get so much clearer. Your accuracy goes up. And, you guessed it, your profitability follows right behind.
Let's end on this powerful thought. In trading, sometimes the most profitable thing you can do is absolutely nothing. Patience isn't passive, it's a strategy. Because every impulsive decision you make isn't just a ding on your trading account, it's a decision you're making against your own future self. So the real question is, what system are you going to choose to follow?